Good morning for this Monday, September 30th, last trading day of September. And I just want to start off by saying, hey, I've been getting a lot of questions regarding what do I do or how do I trade the market in an environment like this where news is talking about a government shutdown tomorrow, Tuesday the 1st. If you've been listening to the news and if you've been worried at all about how that will affect the markets, if you're a day trader, of course, it has absolutely no bearing on anything. In fact, volatility just increases potential profitability and gives you a lot of trade setups, right? So basically, when you're a day trader, you're never in overnight. You don't have that overnight exposure. You can sleep at night. News cannot kill you, right? Because you're in and out during the day. So today, right? Again, today is Monday the 30th, and if the market opened up considerably lower. Let's go to a 3-minute chart and show you exactly where it opened up. Look at this. And I'm assuming it's based on the news, right, of the government shutdown tomorrow, right? Now, again, this is about almost a 16-point gap, right? Closed here on Friday, opened up down in here, and the market has run up. Okay, so there's always opportunity somewhere. So again, you're never caught on the wrong side of the market with a surprise gap up or down. So again, being a day trader definitely has its advantages if you know what you're doing. Let's take a look at a daily chart here, and I showed you what a daily chart looked like on Friday, but let's take a look at a daily chart and take a look at where the market has opened up today. The market opened up right here on the 50 exponential moving average, okay? 50 exponential moving average, which is this hot pink line right here, 50 exponential moving average. Remember on Friday we measured the Fibonacci retracements from this low up to this high, right? This last upswing. And the 50% retracements right in here. So we opened up between the 50 and the 60% retracement of that up move. And we hit the low of today so far right here has hit the 50 exponential moving average. So this is a great potential trade setup first thing in the morning. Let's go back to a 3-minute chart again and show you what that potential trade setup was. Look at, you want to wait. You definitely want to wait for the first bar to close. Okay, now again, as many of you already know, I personally like to use a 3-minute chart when day trading. Okay, meaning that is my time frame in which I'm looking for signals to occur, right? So what I do is I wait for the first 3-minute bars, right? The first 3-minute bar to trade. So I wait for that first 3-minute bar, right? This is the high of the first 3-minute bar, and this is the low. You'll notice that this is Friday, okay? I don't have any overnight data, okay? I don't have the Globex here. It's just the day session only, right? 9:30 a.m. Eastern Standard Time to 4:15. So I don't look, yes, I do look at the Globex, but for this video I'm not going to be looking at it, okay? I just want to look at the 9:30 open. I wait for that first 3-minute bar. So at the end of that 3 minutes, it's 9:33. So on a gap opening like this, you have a very low risk trade. You can look to buy the market as it breaks up through the high of that first 3-minute bar high, right? The initial stop loss on that would be directly below the low of that first 3-minute bar. Okay, so look at, if you're buying it above the 1670.5, which is the high of the first 3-minute bars, you'd be looking to buy it at 1670 3/4, and your initial stop loss would be 66 1/4. All right, so look at, but when you take into consideration the reward to risk on this particular trade, it's not a trade for me. Okay, again, if you're looking to buy it at 1670 3/4 as it takes out this high, and your initial catastrophic stop is below the low, your risk on that is $4.50. Okay, that's your risk. R equals risk. Now, what you'd be looking to make minimum on this trade would be at least what you're risking. That's your minimum first profit target. So if you add $4.50 up to 1670 and 3/4, which is your entry, that would put you at 1675 and a quarter, and that's only a 1-to-1 reward to risk, because that first bar was pretty big. So that's a trade I would not be willing to take. So again, I would be sitting here still waiting for a trade setup. But again, because of the talks of the government shutdown tomorrow, right? An opening like this just simply doesn't affect what I'm doing. Okay? Again, being a day trader, you're never holding a position overnight. You don't have that overnight exposure. You don't have the overnight risk. You're simply trading in and out throughout the day as trade setups occur. So again, in response to all the emails and the calls I've gotten over the last few days, I wanted to answer that. I mean, okay, again, being a day trader really doesn't affect how I treat the market in regards to those bigger economic events, right? Again, that overnight gap doesn't affect me whatsoever. Now, being a position trader or a swing trader, you know, that's another discussion, of course. But look at the market opening down in here. What I'm looking to do is I'm looking to sell puts on the SSO, but that's an entirely different discussion. It's not in terms of day trading. It doesn't have anything to do with the day trading. Again, being a day trader is one thing. Being a swing trader is another, right? Being a swing trader, you're going to hold positions overnight. You're looking for the bigger swings in the market. Being a day trader, you know, you're only looking for moves during the day. So the overnight gaps are not going to affect you one way or the other. You just need to develop strategies around gaps like this. So that the trade setup that I showed you this morning is just one play that tends to work pretty well. Again, you can filter those trades depending on what your risk and reward is on something like this. So, you know, on a trade like this where you're risking a whole 4.5 points, I mean, a 4.5 point risk, initial catastrophic risk, day trading off of a 3-minute chart tends to be a little much for me, okay, especially in a gap lower like this. Sure, there's a lot of room to move to the upside, but of course, the overall bias, since the gap is down, right, the bias is down for sure. So I would be surprised if the market comes back down and tries to retest the low of the day, right? If the market at this point is unable to retest the low, yet rallies up through the high, then I would expect a larger rally. So at this point, now granted it's still a little early, it's only 9:54, the market's only been open for 24 minutes, it's a little early. If you remember back to the very first video on the 3-part video series that I talked about, you know, I talked about times of day. I mean, the first half hour to 45 minutes of trading is very, very key. You know, the first, you know, half hour to hour helps set the tone for the remainder part of the day. So we got a big gap. And again, I want to know if the market's able to take out this high or take out the low. If the market's able to take out the low, okay, then I would suspect that the remainder of the day is probably going to be down and you could sell rallies. If the market is unable to take out this low, this first 3-minute bar that was put in place, yeah, and we take out this high, I would expect the market to rally at least between the mid, right? This is the mid, the yellow, and the upper. Minimum, I would expect to rally up to this point if we take out this high. So again, at this point, it's a sitting and waiting game. I want to know what that first half hour's range is, and I want to know where the market breaks to. So, sorry I've talked to, I don't know, sometimes I tend to ramble a little bit, so I hope that helps. If you've got any questions whatsoever, please let me know. But again, something like a government shutdown potentially tomorrow, that's in the news. That's what affected the open today, I believe. It really doesn't affect how I treat the markets on an intraday basis for day trading, okay? Again, this chart, as you already probably know, this is of the E-mini S&P 500 futures on a 3-minute chart, okay? So hope that helps. I will hope to hear from you soon. Have a great day. Bye for now.